What's going on, YouTube? Welcome back to Jack of All Trades. Brandon is not here this week. He'll be back next week. So it's just myself, Kaylin, and Sam here. We're going to keep it short this week, and we're just going to talk some basics about investing and trading because I had some messages regarding that. And so let's get into it. Kaylin?
All right. So first thing I want to talk about, Sam, if you want to pull up my screen here, Brendan actually pointed this out to us, I think a few weeks back now on Peloton. He just chimed in and said, look at this head and shoulders pattern. Have you ever seen anything so good, right? So I was like, oh, okay, let's take a look at that because, I like short selling, but more than I like going long. So basically what I did is I was looking at this pattern here and, these are the daily candles. As you can see, you got this really nice big head and shoulders pattern. Volume down here, you had your big run up. So you got a lot of volume coming up into this area. So I know that, over $100 or so, there's probably going to be a lot of people that are underwater over here. So when it was pointed out, it was essentially like around here and like the 100, 104 areas when Brendan pointed it out to us. So I started looking into it and I'm like, okay, well, I've never taken a short swing overnight before because as you guys know, most of the stuff I play is small caps and those things have a tendency to gap up 200% every now and again, which I don't want to be involved in. But I figured, this thing's a large cap. It's probably not really going to have any crazy gaps overnight. So like, let's dig into this a little bit. So basically my original thesis on this was we were talking about Netflix a few weeks back on the podcast here. And what happened essentially is Netflix is kind of one of the COVID stocks, so to speak. So Netflix earnings was coming up. And although the earnings per share was actually quite good, their subscribers had gone way down. And then Netflix gapped down. I think it was like 10% after hours as soon as the thing came out, as soon as the report came out. So I kind of use that as a similar sort of thesis for this. I'm thinking, okay, Peloton is basically just a treadmill with an iPad on it. Like it's nothing spectacular.
Yeah.
So like, the product really isn't anything too spectacular or innovative. So right there, I'm thinking, all right, it's not that great. And then essentially I was thinking my whole thesis from a fundamental perspective was, okay, if this is kind of part of those COVID stocks, even if they have good earnings per share, I'm kind of expecting that their sales have gone down since the last quarter, just because, a lot of people are now going back to gyms in the States, like things are opening up. So I'm obviously expecting a decline in sales on this. So what I did basically is, we were over here again at this point by the time I saw this pattern. So on a typical head and shoulders, your risk really kind of is the top of this thing is like your max risk. I didn't really want to go that high because my aim, I'll show you guys down here. I like the line chart. I know a lot of people use different things, but anytime I'm trying to find resistance levels, I always use the line chart, whether I'm looking at a daily or, weekly, like if here I'm looking over a year. This is where I like to find my levels because it just kind of weeds out all the noise, all the big wicks and all that kind of stuff that doesn't really make things as clear. So we were right in here at this level when I saw the trade. So the first thing I'm looking for is like, okay, like, where do I want my target to be? So I'm looking down here, I'm looking at all this volume. I'm thinking, okay, my target's going to be somewhere in here if this trade works out, right? So I start looking at my levels and I'm thinking, probably somewhere in around this level here because, we had this spike pop and then it came down, it kind of consolidated, it's minor, but it consolidated a little bit on this level before it took off again. So I'm thinking this is kind of like my end all target is, this 8190s area. And then my major target was right up here, basically in like kind of the 96 area, right at the top of this spike. And you can see right here, these little niches, if you want to call them, a lot of people don't put too much weight in these, right here, where when you get a big long run up like this, a lot of people look at these big, these consolidation areas like down here where I drew my target. But if you're at kind of a key level, like a breakout or a breakdown, these little niches actually become pretty important because these are, I don't even know the right words to describe it. It's almost like this thing's ripping up so fast. And this is that little pullback where everybody kind of panics in quickly to buy because they're chasing, right? So that's when you get that little pullback and everybody goes, oh, quick, it's come down a little bit, let's buy a whole bunch more. So this is almost kind of like a little bit of a panic buy zone is the way that I personally look at it. I know a lot of people use these in different regards, but that's kind of the way I've always viewed them. And they've been pretty important. You can see here, even if we draw one right at say, 99.80 on that second one there, look at where it came down over here, right? It came down off this big high and it bounced right off that tiny little niche, right? So these actually hold a little bit more weight than people think they do, especially if you're looking at high volume down here. So that wasn't the one I was looking for the actual breakdown, because again, I got in over here. So I got in around 101.50 is where I started sizing in, and my risk was going to be 105. That was kind of my cutoff point. So I wanted to keep it pretty tight on that. The reason I picked 105 is just because, you know, I saw a couple bases in here. There's another little niche on the side here on this uptrend. So I drew my line at 105. But there, right around these kind of areas over here again. You know, a little niche there, a little niche there. So that was kind of what I was looking for as far as an exit point. And it was in around that area. You know, it wasn't, if it was 105 and 1 cent, I wasn't going to cut it. I just wanted to see how that area played out. If it was strong through that, I was going to cut it, because with the size I had, I wasn't willing to let it go up to 125 and get past that. The other reason that I kept my stop so tight is because we'd already had this big pullback. You know, we had a bounce, we had another bounce, and then we had a higher bounce, and then it came back down further. So I know anybody who bought above here is kind of underwater as well. So, you know, really anytime you're short selling, you just want to look at previously, you know, if you look left, you want to see, was there any breakouts that kind of failed, right? That's just going to add more weight to your play. So we have the classic head and shoulders. And then on a smaller scale here, you know, we had this little breakout over the original shoulder, and then it failed again pretty hard. So if you look at the volume down here, you know, that failure was on higher volume than previously, right? So those are all kind of the things you want to look at. Is you want to look for people that are trapped. You want to look for, you know, failed breakouts, broken support, all that kind of stuff is really good when you're short selling. Again, this is just using my knowledge on the shorter time frames, because I haven't swung anything short before. This is my first shot at it, and it happened to work out for me pretty well. So if we go into let's go to the daily candles here to get a bit of a closer look at this. So I entered, I traded this on one of my other accounts, so I can't see my entries and exits here, but I got in at 101.50, I think was where I started. And I think it was on this day here, this green day here. So I got in here, like I was risking just over 105. You know, I put about half size on just to see what would happen. I let it come up. The one day it touched, what's our high here? Yeah, if you look at the high, you know, if you look down here, the screen, I put my line over that. The high was 105 exactly. So I actually added some more up there. I think I got in at 104.90 something. I just had a small extra add up there to see what was going to happen. And then that ended up being the top. So my risk level worked out pretty well. Came down here. And then what actually happened, my 96.85 level was the level I was looking to break. So on this day here, we came down, you know, we came down to 92.66. I actually covered some at 94. I want to take a little bit off just onto that first wash down, because I always like to pay myself a bit. You know, like again, at this point I think 103 or so average. So, you know, I'm up almost $10 a share on that. So I'm pretty happy with that already. Took half of it off. The earnings were on Thursday, which is this green day here. I remember David, I was talking to you and Brendan in the group there, because I was unsure, you know, I'm like, should I hold through the earnings or should I cut it all before? And like, you know, we kind of talked a bit. And as we all know, earnings are always kind of a crapshoot. So I figured, you know what, I'm going to take it all off before, like no matter what it does on Wednesday, I'm taking it all off. So, you know, I had my level set down here at 81.91, and I basically, what I did is I took off half of it. Well, I should say my other, you know, I'd already taken off half. So I took off another quarter at 86 around here. I think that was another resistance level I had. Let's see if we go back to the line chart here. Where is it? I know I saw some resistance there at 86 when I was in here. Yeah, there's another bit of a line there at 90. But anyways, I took some off at 86, and then I took the rest of it off on my 81.91 line, which ended up being almost the bottom. So that worked out really well. I'll just show you guys the intraday here.
Yeah, I was just going to say, the viewers might like to know, like that day when it went up to 105, some people might think like, oh, why didn't you sell? Like, why didn't you sell versus, you sized in more? And like that candle, like, I don't know what the intraday looks like, but that candle tells me it's probably gapped up during the day and just sold off throughout the rest of the day, right?
Yeah, exactly. I'll see if I can find it here.
Because how those things form is really important too.
Yeah, here it is right here. Right. So yeah, if you look at this is a 10-minute candles here. So, you know, we have really big volume in the morning, and we basically went straight up from like, you know, $101, like right up to 105. So like, you see a big move like that, I'm like, okay, this thing, it gets exhausted, right? Like the buying pressure can only last so long when you're pushing up that hard. So
Yeah.
I added a little bit more, and then I just kind of let it do its thing, let it play out. Just kind of went sideways for a bit. We had this pretty decent pullback day here, and then where are we now? Let's go back to the 3-minute candles.
I know Sam was asking us earlier, like when we go into swings, what kind of confirmations do we look for? I know I look at the volume a lot. Like that day when it spiked up, on declining volume. So that's how you know it's kind of a bullshit.
Yes. Exactly. So this was the day here that I actually, so as you can, if you look intraday here, that 96.85 line I drew, this was the day before I covered my first half. So you can see, we were up here close to 100. It bounced off the line pretty cleanly, and then it came off and again kind of consolidated over it, and then it broke down under that line. So now that we've broken down under this line, I'm feeling pretty good. But if you look on the daily chart, we didn't have any significant volume, right? So right now we're at a weak breakdown. Like nobody's panicking yet. It's just it's just falling below support. So I'm like, okay, everything's looking good, but I'm still kind of skeptical. And then so what I did this day, just to take a little bit off, I actually covered some around here. I think at 94 is where I took half of it off, and we opened. We had a quick snap down, and then it went straight back up, and then we have this double top right again at the same 96.85 level. This is a level that I've drawn off the daily chart from months ago, right? So it's kind of interesting how it works so well even in the 3-minute time frame. And then this was the big day here. So obviously I can complain that I didn't hold my whole position for this, but I mean hindsight's hindsight, right? So basically what happened is we opened above this line, and key thing here is look at the volume. So 9:30 we are right here, really low volume. We're just kind of bouncing over this line, and then right there, so this is 9:51 now. This first big candle there, 9:54, look at the volume. It's 5 times what it has been in the morning, and that's the big push right below. So if you're looking at this intraday and you see that candle, that's your confirmation. So Sam, I know we were talking about this before the podcast. I don't want to see any wicks on this. I don't want to see low volume. I want to see a big fat candle that, opens at the top of the candle and closes at the bottom of the candle. That's when I know it's game over, right? So as soon as I see that, I can just relax, I can just let this thing bleed down. And look at that 81.91 line that was, drawn from what last October or whatever it was. We touched it on one 3-minute candle, wicked through it by, 30 cents. Like it's clear as day. That's why I like the line chart. The line chart gives you really, really clean levels to work off of. And then look at that. It just bounced off it perfectly all day. And then earnings, to be honest, I didn't even look at the earnings. So I don't know what they said because I'm out of the trade at this point. I don't care. So if you're going to ask me what the earnings were, I couldn't tell you because that's, as soon as I'm out of it, I don't care.
I love that you're like the complete opposite.
That line kind of holds a little bit of weight.
No, I was just saying,
it's
I
funny,
love that you're the opposite.
Yeah, I actually heard a really good quote the other day. It was from Mike Bellafiore in One Good Trade, a book I'm reading right now. It's about like prop firm traders and stuff like that. And he said at one point, he said in it, he was talking about one of his traders who wouldn't cut his losses. Like he would always say, okay, yeah, this is my exit point. And then when it goes below it, I'll be out. And he could see all the trades on his monitor. So he would say, hey, how come you're still in this trade? Isn't it past your exit? And he says, yeah, I should have cut it. I'm sorry, I should have cut it. And then he would just hold it, and it would go down or whatever. And then long story short, they ended up letting the guy go. And Mike says in the book, he goes, for anyone that's interested, the stock never did come back because he was convinced it was just going to rebound, right? He's like, so for anyone that's interested, it didn't come back. And he's like, for anyone who's not interested, congratulations, now you're thinking like a trader. I thought that was so good. I was like, so in other words, once you're out of the trade, don't worry about it. You're out of the trade, move on, right?
Yeah, so I remember, I don't know if it was on Chat with Traders. I don't know if I found it. It was one of the ones you sent me, but the guy was like saying how it was partly about how to get over like a bad set of trades and whatever. And he's like, your next trade's your next trade. Like it has nothing to do with anything that happened before. You have to separate the two.
Yeah, it's funny. Like in this book, like it's called One Good Trade, and that's one of the things he keeps emphasizing. He's like, how do we make money? We do one good trade. And then we do one good trade, and then we do one good trade. That's all you do. It's just one thing at a time. And one of the other guys that I follow on Twitter, actually, he's a day trader. He only really does long trades, and he tweeted the other day about like a little blurb about his morning little report, because a lot of, like, I do it too, but like a lot of guys have a little report they'll read, and it's like every morning they read this, like, what are my rules, what do I stick to, just to kind of like remind yourself every day, right? So like his thing was like, he treats it like a boxing match. He's like, we have 3 rounds. He's like, round 1 is 9:30 to 11 o'clock. Round 2 is 11 o'clock to 1 o'clock. Round 3 is 1 o'clock to 4 o'clock. And he's like, and underneath each one, he says, what if you lose money in round 1? It doesn't matter. There's still 2 more rounds. He's like, what if nothing happens in round 2? Don't worry about it. Go to the gym, go get lunch, come back for round 3 refreshed and ready to go. What if nothing happens in round 3? Don't worry. There's always tomorrow. Like, you can live to fight another day. Like, it's just like he has it all written out, kind of like a boxing analogy. But that's the way that he reads it every day. That's the way he goes about his trades. Is he's like, it's just rounds. It's just one round after the other. So you can't. If you lose money in the morning, forget about it. Like, how do I trade between 11 o'clock and 1 o'clock, right? Like, that's what I need to think about, not what happened in the morning.
Yeah, I think that's like, I know I'm still struggling with that. Like, I can't look past the trade, or I can't look past today, but I'm starting to realize it's like, it's super important to know that there's always another trade. There's always tomorrow, right?
Yeah.
There's always next year. So like, don't let like what's going on right now like mess with you too much. Because like, it's short-term thinking that really screws you up. It's trading and investing too.
Yeah, exactly. And it's really hard when you see that big fat red number staring right in the face. You're trying to make your money back, right?
Yeah, like what's it called? Revenge trading. Like, you never want to get to that. It's like when guys play poker down full tilt, one bad beat, and it's like, fuck it, like, let's keep going. Like,
yeah, exactly. Like, yeah, you always kind of have your max loss, but you don't want to try and make it back, right? Like, I mean, the reality is, when you're trading, like, nobody is profitable 100% of the time, right? Like, a lot of the really good guys, they only lose money, like, they only have a red day maybe once a month or something like that, but they're probably losing money on a trade almost every single day, right? Like, if you look at a lot of guys' charts that do this professionally, they'll have, they make 6 or 7 trades in a day. I guarantee you, probably almost 95% of the time, at least one of those trades is red.
It's a good thing you mentioned that prop firm, because I remember I was watching something about that. It was a specific prop firm in the UK, and they're like, but I think all of them do it. There's like, our traders have like a max daily loss. If you hit that, I don't give a fuck. If it's 9 a.m. or 9:31, you lost it in the first minute, you're out. Like, just go chill out.
Yeah, you have to. You can actually set that through your broker too. Like, if you are doing like big like intraday trades or something like that, like, you can set an intraday max loss of your broker. So like, let's say you want to be $1,000 or something like that. If you're like underwater in the trade and it's going against you, like, as soon as your dollar value gets to $1,000, your broker will just cut it for you, and they won't let you place any more trades until tomorrow.
That's important, man. Because I've, as recently as mid-March or early March, I think I've revenge traded. It was that period where I did like 3 bad trades, and I gave back like a month's worth of profit. I was still trading Bitcoin futures, and I had that one revenge trade day I mentioned before, where it's like, I managed to get lucky. I literally just got a lucky bet, put a lucky trade down, got my money back for the day, and I was like, and I walked away. I'm like,
yeah. I know it's tough. You can't, like, that's why trading is so difficult. It's like, you're trying to, it's just human nature, right? Like, you feel like you've been robbed, but like, you got to respect the marketer. It's going to take money from you. That's the only way.
Yeah.
You can't fight it. It doesn't care.
100%.
Right?
100%. I got so I had a message earlier in the week about somebody there. Actually, it's a common question, but I specifically told this guy that we can touch on it on the podcast. But it's basically like, if someone's getting into the market now, whether it's investing or trading, what kind of advice we would give them, what kind of resources we would show them. Do you have anything from like a trader's perspective?
Somebody's getting into the market right now?
Yeah, if they want to get into trading right now, day trading.
I would say the first thing you want to do is basically just try a little bit of everything and paper trade. Like, get used to drawing lines, like, get used to drawing resistance and support lines. When you're first starting out, I mean, it's easy for me to say, like, look for good long setups or look for good shorts. You don't know what that is when you first start, right? Like, I didn't know what that was. I started trading off news articles. When I first started trading, I didn't even know that there was such thing as real-time charts.
Me too.
Yeah,
I just Googled them.
So like, if I'm going back to that point, I would basically just say, find a good broker that offers low commissions for whatever you're trying to do, whether you're trying to hold long or do short-term trades or do a lot of frequency. First off, find a good broker for that. Next thing you're going to want to do is figure out, when is a good time to trade for you. Like, are you, just on your own personal level, like, are you really alert in the mornings? Like, are you not available to trade during the day? Do you have to swing trade? Do you have to set orders at night and, just let them play out through the day? Just kind of look at your life schedule and figure out what sort of setup is going to work for you. Once you do that, I would say, okay, now, play around a little bit with paper trading, like try some high volatility setups, like the small cap stuff that are moving like crazy, try those. If they stress you right the hell out, then maybe you don't want to play those, like look at large cap stocks. Like large caps are kind of like a safety net sort of thing. Like I know some guys that they trade large cap stocks predominantly on the long side, and they'll do shorter term stuff. But if they get underwater, they'll just hold it for like a couple months if they have to, because like they'll be playing, like say they're playing the S&P, right? Like they might take a big position, maybe they're down way more than they want to be down, but it's like, okay, it's the S&P. Like I'll just, like, it sucks, but I'm just going to hold this position for 3 months if I have to until the S&P comes back up, and then I'll be okay again, right? So, there's a lot of different ways to look at it, but really you just want to figure out, you can't know any of that until you start playing around. So I would say just paper trade. Find a good broker that's going to cater to you and figure out kind of what time frame you're looking for, and then just focus on those time frames. Like, take a look at earnings, news reports. Like a lot of guys just trade earnings. There's really not really any specific advice I can give someone as for what to trade, because there's so many different ways to trade. You just have to fumble around for the first little while until something grabs your attention. I guess that's the best way to put it. Is it has to be something you enjoy, right? Like I don't enjoy, really trading small caps. Like I swing trade, I invest. It's not super thrilling. I'm not in love with it. I just do it because it's kind of a branch of what I do on my shorter term stuff. But it's got to be something that you're really in love with. Like you gotta want to come home. Like if you're working full time, like I am, I come home from work and I look forward to getting in front of my computer for 2-3 hours every night and looking at the market, looking at the charts, like seeing what happened. It's like I love it. I love the style that I trade. So that's the biggest thing, is you're not going to put work into this unless you love what you're doing, and you got to just fumble around in the markets until you can figure out what you love about it.
For those that don't know, brokerages are like interactive brokers. Robinhood's considered one, I guess. Which ones do you recommend though? Because I've made a interactive brokers thing before. I didn't trade on it, but I remember I like the UI and everything like that.
Yeah. So I use interactive brokers for all my shorter term stuff, because I make a lot of orders. Like I'm sizing in, I'm sizing out, and they have the cheapest commissions. Like they're like a penny in and out, and I think their max is like $5 or $10 or something a trade if you're doing like 1,000 shares or whatever. So they're really cheap. So I use them for like my shorter term stuff. My longer term swing trades and investing, I use Quest Trade, because I don't need real time data for them, so I don't pay for it. And they're $5 in and out. So, it's more expensive on commissions up front, but if I'm holding a position for a week or 2 weeks or a year, like it doesn't matter. And there's no inactivity fee. So like I can, like interactive brokers, they charge you, I think $25 a month or something regardless, unless you make that up in commissions. But Quest Trade is like, I can just buy a bunch of stock and not touch the account for 2 years. They charge me a penny.
Yeah, so I think that's important for people to know, to like figure out what brokerage has those features that caters to you. Because I do most of my trades on TD. We get hosed like $10 a trade.
Yeah.
But all my accounts are set up there. I'm too lazy to do anything else. Like, and the thing is, actually, I just got the email from interactive brokers to close my account, because they're like saying like, there's an activity fee or whatever it was, right? And I was like, I'm not paying that. Like shit. So I just closed the account.
Yeah. I know, that's the other thing too. Like you get stubborn too. You start using something for a while, you don't want to change. Like,
yeah, because like I use TradingView, right? So all my charts, all my drawings from like 4 years ago are still there. Like I can't just switch, like I kind of trap myself.
Yeah. The one thing I would say though is don't use Wealthsimple or Robinhood, because they're just, they're free brokers, but like they're so garbage. Like, you're gonna get terrible customer support. Your order entries are gonna be awful. Like the order flow is going to be terrible. They don't even let you trade half the stocks out there. Like,
Yeah,
it's just there's you know, I don't want to sit here and be Mr. Negative, but just you get what you pay for. Like if you're going to pay for, you're putting a lot of money into the stock market, like spend the extra, $20 a month to get a good broker that you can trust with your money. Like it is basically a bank account, right? Like would you give your money to like a free little hey, give me your money, I'm free, would you give your money to that guy to hold your, like, as a bank? Probably not.
I gotta give a warning about Wealthsimple because I remember I making an account before just to kind of check it out because I saw their ads and I thought this might be a good platform to trade on. It's the worst, at least for what we do, because like you said, they actually are one of the companies that but like they filter what kind of stocks you can invest in. Like you can invest in Tesla, but you can't do XPeng, even though both are listed on the same exchanges, right? And like, especially for crypto, they won't even let you withdraw your crypto. They are forever holding it in custody for you. So you don't. So if you buy Bitcoin, is it even your Bitcoin? You can never remove it. It's like, so I think for them, it's like pretty good for somebody that wants to not really trade, but wants a really simple, easy way to like invest, maybe drop a few $100s in the stock. You got a cool little app you can check up on your little investments. But if you want to do any kind of advanced features or trading or anything like that, Wealthsimple, you got to avoid that thing.
Yeah, I would say like if you have over $1,000 that you're going to put in the market.
Yeah. The worst is having like $1,000 to do something and you can't do it, right? And then when you
too, don't they?
I have no idea.
Like my buddy was telling me that his brother has Wealthsimple, and it's like he said to buy the stock was free, but then when he went to sell it, they charge him like $10 or something. I don't know if that's true, but if it is, that's hilarious.
I can see them doing that. That's like a bait and switch. That's so bad.
Yeah. Have you seen all the ads for them too? Like Wealthsimple, I get them all the time. Like
I've seen a lot of them on YouTube, and I find them offensive actually.
Oh, man, have you seen the one where there's like this girl and she's like, investing as a millennial be like, what is a stock? I'm just like, oh no.
Really?
Yeah, you haven't seen that one?
No, I saw this one where there's a dude, he's like a young millennial dude, but he's pretty condescending. He's on there trying to explain like what the market is, and I'm like, you're like half right in all this. Like he's just oversimplifying everything.
Yeah.
It's like I find it so offensive.
I know. My buddy, I had a good point though, because I was talking to my buddy about that the other day, and he's like he was just complaining about all the Wealthsimple advertisements too. He's like, oh my God, like these people have no idea what they're getting into. And I was like, okay, to play devil's advocate here, like granted, like when I first started trading, I opened up a Questrade account. I had no idea what I was doing. So like, there's not really any difference there apart from like where you can put your money or putting way too much into stocks that are way too volatile. It's just like, just the whole aura around it is just so painful.
It's gotten bad, man. I think everybody these companies just want easy money, right? They don't even just trying to attract like dumb money and get some fees and whatever. But
yeah,
but yeah, like what's that?
Sorry. Oh, I was just gonna see if we get the next chart here.
Oh, okay. Yeah. Before you go into that, I just wanted to talk quickly about the investing side. Just the same thing, like if you want to get into, because the question was like, is it a good time to get into Tesla? Because like, I mean, nobody could really answer that question. Like I didn't really answer it either. I'm like, well, if I knew that, I'd be a millionaire, right? Because like Tesla's high was like 880 or something like that. So I think it's closed at 660 the other day. But it's still like 8 times what it was like about a year ago. Like I can never recommend buying a stock when it's near that, it's pretty close to all-time highs, right? But at the same time, this thing can run. So I'm like saying, just dollar cost average, just DCA. Like if you really want to own this thing, and this is not, and here's the thing, actually, you shouldn't invest. I don't think you should invest money that they're not willing to just leave there for like 3 to 5 years or even longer, right? If you see yourself pulling that money out, then I wouldn't call that investing money, right? Because a lot of times you don't know what the time frame is. You could be right about the performance of a stock. You could be right about the price, but wrong about the time, because not many people consider the time factor, right?
Yeah.
So like if you need to pull the money out, that's going to cost you.
Yeah, that's exactly how I went about all my investments. Like I got money in a handful of different things now, and like I've put a certain amount of dollars away that I know like I'm totally comfortable not touching in at least 5 years. Like I'm like, I know 100% I don't need this money for at least 5 years. And then I have other ones that I've bought that they're like a year-long play. So I set tighter stops, and I'm like, this is money that I want to take out next year for, X purchase or whatever I'm planning on doing. So, but I base that on the trade, like I look at the trade and I'm like, yeah, I think this is a good company this year kind of thing. And if it goes down to here, I'm out, because I don't want to lose more than that. And I need at least this much money to do what I want to do next year with this. Right.
That's a good point. I think I could recommend. I would recommend people that if you're serious about investing, open up a self-directed RSP. Like your bank will offer that kind of account, right? And because it's RSP, it's got two benefits. One, at the end of the year, you contribute to that. You could report that against your income, get some save some tax dollars there. And then two, because it is an RSP, it's basically locked there until you're 65. So it forces you to do some long-term thinking and long-term decision making, right?
Yeah.
Yeah, and then the TSFA opened last year just because I wanted to do what you wanted to do. I wanted an account where I could trade. I don't necessarily have a time frame for the profit, but it's more like an account for like big purchases. If I ever need it, like car repair or whatever it might be, I'll trade in that account. If I need to take some big chunk of money out, that'll be what it's for.
Yeah, exactly. Yeah, like I have mine set up in a bunch of different ways. Like my short-term trading account is all cash, like basically all the time. And then I have, my Quest Trade account is kind of like split into three portions, I guess you could say. Like I have cash in it, and then I have my shorter term swing trades. I have my, like year-ish long investments, and then I have my, basically 5-year plus, call them retirement investments, right?
I just noticed something. I think maybe we do it. I don't know if we do it out of our personalities or it's just something that good traders, investors do, but we compartmentalize. Like you just said you have accounts for certain specific things, and then I do too. Like I don't mix my crypto with my equities at all. I don't even think of them as the same thing. It's not my one investment portfolio. One is one, the other is the other. If I'm losing money in my crypto, I'm not taking money out of equities to go save that shit. Like, what I mean? Like everything's separate.
Yeah, no, I'm the exact same way. And then in my actual bank account, I have like literally nothing. Like I have enough to like buy my food for the week, and that's it. Like I hold a lot of cash in my trading accounts, but like I don't have any because like I don't know, like I want to look at my phone and feel like I'm broke, because then I'm gonna work harder.
No, I
so
like
when
that.
I look at my bank and I'm paying my bills and paying for my food and my mortgage and stuff, I'm always like, oh man, I have no money. But it makes me work harder. It makes me be smarter with it.
Yeah, I'm starting to think that's a good way to go about it. Like keep less cash in just like a regular, some kind of savings account. Keep it in a TSFA or some kind of trading account, because you can deploy. Because like if you see an opportunity in the market, you can't wait for a wire to like show up 3 days later. Like,
yeah, exactly.
Like, right? Like everybody says, oh, buy low. Like, yeah, low's happening right now. Like, go load your account. Go ahead. Like, you can't take advantage of that. Yeah.
Yeah, no, I don't know. It depends on the personality, right? Like for me, like I've never been one of those guys that's like, frivolous spending, buying clothes and watches and all that kind of stuff consistently. I'm the kind of guy where like I aggressively save money for a period of time, and then I'll like, I go to the cottage and I'm looking around like, ooh, that's a nice boat. I'm gonna buy that boat, and then I'll go over and buy it like right then. So like I just make these big obnoxious purchases, but I don't throw little bits of money away all the time.
I think that might be good for discipline. I guess we're already doing it, but maybe we could use that as a recommendation. Like just compartmentalize and like take inventory of all your cash flow, your profit, and your income and your savings, and then divide it all up, and then just make sure you're not crossing those lines anymore. You need to, because trading and investing, it's all discipline, right? At the end of the day, so it's like you really have to exercise that stuff in every aspect.
Yeah, it's even just like a little bit of a safety net too, right? Like then you have a little bit of money split between a handful of brokers. You have a little bit of money split. Like I have 3 different bank accounts. I have 2 different brokers. Like I have money in so many different areas that, like, God forbid, one of the banks went out of business or something like that, I'm still okay, right?
That's a really good point. I actually learned that from crypto from 2017. I had crypto on some 2 exchanges that closed down. Under mysterious circumstances, and I lost some.
Yeah, and you're screwed, right? So
I'm screwed. Yeah.
All your money in that, like.
Yeah. So like even as recent as last week, I realized I had too much shit on Binance. So then I started shifting. I made the account on FTX, and I started just separating my stuff. Like any account that seems to have too much money, like I'll start to, separate it out a little bit. It stresses me out. Like one place, it's like one point of failure.
Yeah, I'm the exact same way, man. As soon as I get too much money in something, I start putting it somewhere else.
Like, and going back to what you were saying earlier about where we're like dividing accounts. I don't know if you would agree with this, but I think you are. It's like when the reason I also don't like keep a lot of money available for spending is because when I now spend money, I think about it like, well, what if I invested this dollar? What if I just tie it up for 3 years? Yeah, right.
Yeah, dude, I'm 100% the exact same way. Like I go to like Harvey's or something for lunch and I buy a $14 hamburger and I'm like, oh fuck, I feel like I'm just burning this. I'm like, I could turn this $14 into $15. Like,
Or like, you can turn it into like a steak dinner in like a few months. You know what I mean? Like,
exactly. Yeah, yeah, man. I think about everything like that now. It's so bad.
It's awesome. It's awesome. Do you want to show the guys the leads?
Hey?
Oh, yeah, the leads. Which one's this one?
So here, I'll show you the daily here first. I don't know anything about this company. This is just one of my small cap junkie
It never gets old when you say that. Like, you're like, I'm in this company. I don't know shit about them.
Yeah, I honestly don't even know the name of them. I don't know what they do, so don't ask me. Regardless, so I was looking. So the way that I trade, like if I'm doing like a short-term trade or something like that, obviously, like you guys know that I work full time. So like when I'm doing a lot of my trades in the morning and stuff, I get up at 4 a.m. every morning, and I look at the charts because I'll make my watch list the night before. And like the way that I do it basically is I'll set out. I call them like fishing orders, or some people call them fantasy orders or whatever. Basically, you just set out a short entry, a stop loss, and you can set a couple cover targets like before the market, at 4 in the morning, right? So that's what I do, and then that way I don't have to watch it or anything when I'm at work. I just get my handful, and then I'm looking for that half hour, 45 minute in the morning. So I'll just have them all cancel at a certain period of time if they haven't executed. It's basically the way that I do a lot of this. Then obviously, if I have a day off or I'm at home, I'm actively trading. But so for the reason I wanted to show this one is because I just wanted to emphasize again the critical importance of having stop losses, especially on the short side. So this is I'm most proud of this trade, like more so than I have in months, and it was a loss. And the reason why is because
was this one you showed us the other day? Recently,
yeah. Like I honestly I went home, like I still made money on this day because I profited on a couple other trades, but like this is one of those things where you always hear guys like, oh, if you're not careful, you don't set your stop losses, like you could be making money for 5 years and then lose it all in one trade kind of thing, and you're like, oh yeah, sure, whatever. Like this is one of those times. So this is why I wanted to show this to you. So basically, we had this day here. We had a big green day, a big wick. So stock looks kind of dead or whatever. And then we have this kind of smaller green day. So I was looking to short it here on this, on this big fat green day right here. So that was where I was trying to short. So we'll go into like as I always do, I go to the line chart. So let's go back here. Okay, yeah. So this was our first green day, right? So we're basically right near close. We're 14:52 on the clock at the bottom there. That's when we got our first big monster spike up, right? Came back down. Second day, I think I actually shorted some into this bottom here, like just over 6, and covered down. So I made a little bit of money on the second day. And then third day, what I was looking for is on these ones here. What I like to look for me personally, I like these bottoms. Like I like it when I see on the line chart, when I see like a really strong push, and then that first little pullback, or this one here where it kind of dribbles down. So like on this one, for example, like I like 677 and I like 618. Like those are the two lines I would draw, right? Like I'd look for that and I'd look for that. Like those would be my two levels. So I'd probably put an order here, and I'd cut it like just over top. That's like this is my favorite thing to see on any kind of these stocks. So I'll just take these lines off. So we got it again here on the second day, right? Like we had this push up, and then we kind of had like this base here, right? So we had kind of we had sort of 561, we had 583, right? So those are two pretty nice levels for me. And then you can see throughout the day, we kind of came up here. You can't see it on the line chart, but this kind of wicked into 561. And today again, we kind of double topped here at 561. And then down here at the bottom, or right around, say 470s area, we got this big area of support right here, right? So essentially, you know, I woke up in the morning as I do. I'm looking at the day before and I'm thinking, okay, I look a couple days ago, like this thing can move, right? Like this thing went from $4 up to $7 in, what is that, 45 minutes or so, right? So I know it can move. You know, it's a small cap stock. So obviously, you know, we need to be careful on those ones. You don't want to get underwater. So I'm looking at this. This is kind of the day that I'm focusing on right here. So I went into the morning and I'm thinking, okay, you know, I want to short this. Basically, I want to short this into, you know, the 560s area. So I put one order just over the 560s, and I was going to cut it just over this 580s area because I didn't think, you know, with these three tops here, if I zoom in a little bit too on the line pattern, you can kind of see a head and shoulders here, right? You come up, there's the first shoulder, here's your top, down here's your second shoulder, right? So I'm kind of combining, like, you know, we got a head and shoulders in here. It's kind of topping at 560. We have basically, you know, 4 times it's hit this line. It hasn't broken through. So, you know, I'm combining all these together. I'm thinking, okay, this is a pretty good area. So I'm going to put a short order up here. The cover targets were basically going to be like around 510 at this base, and then, you know, ideally 470 for the second half. So I was going to try and cover some here, some down here. I wasn't going to try and, you know, anticipate a break of this big 470 area because that's just, you know, that's a lot of support. I don't, you know, I just look for the quick move and that's it. So what happened here, I'll show my trades for the last 5 days. So it pops up. Let's go to the 3-minute chart. Put back. All right.
Yeah, people are curious. This is the Interactive Brokers. This is the application you can download, right? The workstation.
Yeah. This is Interactive Brokers here. So this is what I trade off of. This is what their interface looks like. So this was that first day again. You know, I had the big spike at the end of the day. This was the second day. So, you know, yeah, again, as you can see, you know, it's like the head and shoulders and stuff. It's kind of tough to see, like that 583 line. You almost can't even really see it on the line chart or on the candle chart. So that's why I like to use the line chart. But yeah, 561 was the area of interest. So I put my, like, as I always do, I put my short, I put my stop, and then I had my cover orders in, right? So let's see what happened. So you go over to the next morning, load up. So here's pre-market. You know, we have like really no volume. So that's kind of an indicator that's probably good. You know, it's up near this area, but there's no volume. So a lot of the times when that happens, you're at the top of the level, it'll just tank right out of the open. But what ended up happening was this. So this literally happened within probably a half a second. I mean, it literally just went 530. It went straight up to 650 and halted. So these are my orders right here. So I got short at 565, and I don't know if you guys can see that, but I think there's actually 3 orders that it covered. So I entered in one shot, and my stop order, which was also one shot, it took 3 really quick orders to exit. That's how quick this thing was moving. So, you know, we had this massive bar. This is on the 3-minute candles, but I wasn't, you know, I just had this pop up. It was just like, you know, basically short covered. Like I had 2 notifications just ping up instantaneously. So that's why I always say, you know, you got to use hard stops, because even if I was involved in this and I was sitting there and I was staring at this, there's no way I could have reacted fast enough. Like, you know, this was my max loss right here, like 20 cents. That was all I was willing to lose on this. And I was trying to make, you know, 50, 60 cents. So I took my max loss 20 cents. And if I had been playing this even manually and let it go up to here, I mean, that would have been more losses than I'm willing to take in a week, let alone in a single trade. Right.
Yeah, it's like within a 3-minute candle span, you're down like 18% if you didn't stop at it.
Yeah, exactly. And then it halted, right? So obviously after it halts on this kind of volume, now everybody's watching this thing. So I don't even care at this point. Like I'm out, right? Like my thesis is invalid. I lost. So that's it. Game over. And then, you know, let's see what happened here. Look at that.
Oh,
so here down here is my shorts and covers. You know, the little symbols here overlap each other. And this went from, you know, my 20-cent loss, it went straight up to $13. 13.45 it looks like at the top. So
this ties in really nicely with that story you're saying you were reading in the book. Like, had this been that prop trader who kept his position, like this is how much worse it can get and how quick it can get. Quickly it can get that bad.
So let's just imagine for a second, you know, I shorted here and then it shot up here and it halted, and I'm going, shit, you know, I'm way underwater. I'm way more underwater than I want it to be. I'm all angry. I'm frustrated. So I'm going to say, okay, well, I know this thing's a piece of crap because it is. So let's short more up here at 680, right? So I add even more size up here. Keep in mind, I'm already basically full size down here. So I add even more than I want to have. Comes down here, okay, maybe I'm like around break even. Maybe I don't cover, and then all of a sudden, boom, right back up again to new highs. You're going, shit, okay, well, it's kind of consolidating. Let's put a little bit more on here. And then boom, and then it consolidates, and then boom again. Like, this is the kind of thing where you end up adding 5 times the size that you want to, and this would shred your whole account. Like, if I didn't take that loss, I probably would have blown half my account on that, even if I didn't add any more, right?
I honestly think that's exactly what happened. Like, this was like a bear trap, and all those green candles on high volume were like just short sellers getting short squeezed.
That's exactly what it was. Because like that was a good short setup. That's why I put my orders there. Right?
It's a hell of a bear trap. Holy shit.
Yeah. So, but that's the thing. I mean, I got in here at, what was it, 560 or something like that, 565. I think I put my order on. So, if I let this thing run against me, you're looking at like 140, 130, something like that % loss, right?
Yeah.
In a matter of, an hour, if that. After the first hour, you're down 100%, and then if you're still holding on, then you're down 150%.
And like, I don't know exactly how the math works, but like, if you're like, you can only short margin accounts, right? So if you're margined, you won't even get to 100% something loss, right?
Yeah.
They'll like stop you up before, like blow up your account before that. The margin call you.
Yeah, exactly. Like you would blow your whole account on this move if you had too much size on it. And that's the other thing, like David, I can't remember if we were talking about this before on the podcast just today or earlier, but I was saying how you can put a max stop loss like in your broker. So like, if any of you guys I think everybody should, like, I mean, I have my mindset and everything, but basically, like, let's say you don't want to lose ever more than $500 in a day, then you can put a $500 max loss actually into your broker. And what'll happen is, no matter what you're in, if you're in 5 different trades and they're all going against you, as soon as your dollar value on the day gets to negative 500, it'll automatically close all your positions and you can't trade again until tomorrow. So I think that's another thing, like, to go along with hard stops, is everybody should have that on there, because this is one of those things where, like, if I kept adding on this, I would be so frustrated and emotional. I wouldn't be able to think straight. And I could have been the greatest trader in the world for the past 2 years, but this could have just wiped me right out. And that's, it's in that one moment when you just have that little lapse in judgment that your broker can just say, nah, we're gonna shut this down and let you come back tomorrow, and it'll save your life.
I think people might be hesitant to use that feature because they're thinking it's restricting you. But I want people to think like that's your buddy at the bar trying to stop your drunk guy from drunk dialing his ex-girlfriend. Like, you want that, you want that security there.
Yeah. And also, like, it shouldn't really be ever anything that you get to while you're trading either. Like, if you're letting trades run that far against you, you're not trading right. I mean, like, let's say you have a $10,000 account, like, you want, you put your max daily loss at like $500 or $600 or $700 or something like that. Like, that's a big chunk of your account, right? Like, you shouldn't be letting trades go that far against you. Like, if you have a $10,000 account, like, you really don't ever want to risk more than like $100. So you basically, just multiply whatever that is by 3 or 4 times, and you have, say, $500, $400 or whatever on a $10,000 account, and that's going to be your max daily loss. Because if you're letting that happen, or you're getting close to that and coming back on a regular basis, you're not trading right.
The realities of trading are not what people like think when they first get into it, or they're thinking about getting into it, because they think, oh, I'm just going to put $1,000 in there. I'm just going to buy low, sell high, and just trade this $1,000 into 10 grand, by the end of the year or something.
Yeah.
Meanwhile, guys like Peter Brandt, like legendary traders, the guy's got like 7 figures in his trader account, and he doesn't take a position larger than like 10, 20 grand. Like a 7-figure account. Like, he's like, no, 2%, that's it.
Yeah. Yeah, I know guys that trade like that too, like guys that make like they're 7-figure day traders, and like a handful of them I know only keep $50,000 in their account, and as soon as they get over $50,000, they just wire it out, because like it just depends on the person. But like the one guy I know that does it, I think he only keeps $35,000 in his account. He's like I just know myself, and I know that on those days where I get flustered, if I have $500,000 in my account, I'll be like, oh, I got all the capital in the world. I'll just keep adding and try and push it down, and then I'll lose way more than I want to.
Right. That makes a lot of sense.
I mean, there's both sides of the coin. Like, I mean, I'm kind of the sense where, and again, like, I haven't gotten to the point where I'm making 7 figures a year. So maybe when I get there, I'll have to do that sort of thing too. But I mean, the reality is everybody's different. So like you'll talk to some traders and they'll say, well, that doesn't make any sense. Like, if you have $1 million in your account, you still just play it on percentages. So you only risk 1% per trade, whatever the dollar value is, it is. Like, you look at the percentages, you don't look at the dollar value. Whereas other guys will look at it and say, oh, well, I have all this capital. So if the trade's going against me, I can put in way more, right? So maybe those are the less disciplined guys. Maybe it's just a mentality thing. So not everybody's going to be able to do that, where they can have $1 million account and be like, oh, I'm only going to risk $10,000 every trade. To some people, like, even if you're making that kind of money, it just messes with your head to the point where you can't make rational decisions.
That's the thing about money, man. It just messes with your emotions. It'll change the smartest, most self-disciplined, rational person into like some nutcase. Like, this thing with Dogecoin. Like, how many? Remember we were joking the other day, like how many friendships were ruined because of Dogecoin.
Yeah. As that statistic you sent us, it said like what was it? It was like 70% of relationships that like where people had 80% of their money in crypto were failing. So
we're failing. I know. It's become a religion. Like, oh man, I think what's Doge down like 20 cents in the last 24 hours or something like that. I think it was like 70 cents. And like it's still up like significantly from I think 3 months ago. I think it was like 5 cents or whatever it was. But like, I have no doubt that there's somebody had to have bought the top at 70. So somebody's underwater for sure.
Yeah.
Right. That's like
it's just normal though. Like, I mean, I know it was like, everybody, it's like with Doge and GME and all these other like, all this stuff that guys are seeing now. I think it's just the age of COVID and social media. Everybody's, wow, this thing's up 40% a day. And I'm sitting over here like, yeah, I see 5 of those every day almost. Like, it's not uncommon in the stock market to see something that's up and then it's down and then it's way up and then it's 200% and then it's down 50. Like, everybody's getting all up in arms in it and everybody just gravitates towards this one thing. Meanwhile, around the corner, there's 10 other stocks doing the exact same thing. It's not an outlier. It's not this big, great, spectacular thing. This stuff happens in the stock market literally every single day of the week.
Yeah, I think that goes back to what we were saying earlier about like time frames and whatnot. It's like this one. I don't know what it is about people that start like you. I think even I'm guilty of it. It's like this one good trade is going to make me. Like, that's what I had in mind. It's like I'm going to do this one trade and that's it. It's like, no, it's just one trade after another over years, and then you get somewhere.
Yeah, that's what I always have to keep reminding myself is like I was like that at the start too. Like, I remember at the time I just bought my Challenger and I was financing it, right? And it was like September or something when I started, like the year I started trading. And I had like 30 grand or whatever left on my car, and like I was just looking at these guys that were like, oh yeah, $3,000, I'm done at 10 o'clock in the morning, and like another guy like, yeah, I made $12,000 today, another decent day in the markets. And so I'm like, oh, this is cool. And I started looking into it, and I was just like, oh, I'm gonna pay off my car by Christmas, like no problem. Like, I was so confident in it, right? Like, I thought for sure. I was just like, oh, I'll just trade these stocks and I'll be making thousands of dollars every day, right? And here we are 4 years later. And now I'm just like, I just want to make consistent money every day. That's all I want to do. I have no desire to, hit one trade and make $1 million. I mean, if I see something that I love and it's absolutely perfect, sure, I'll throw more money into it, but I'm not out there searching for that one, biblical trade.
I like how you termed that. It's true though. It's true. And like, we say this all the time though. It's like bull markets teach people only bad habits.
Yeah.
Like, your only expectation is the stock goes up or whatever goes up, and then you don't know how to. Where you're never challenged to exercise discipline or any kind of those get out of those muddy situations, right? It's just all up.
Mm-hmm. Yeah, it'll be interesting to see, because I know like from the obviously I wasn't trading back in 2001 or whatever, because I was like 9 years old, 10 years old or whatever. But like, I know back in like 2000, 2001 and stuff, like from all the books I've read, that was that seems like it was kind of the last time when like everybody and their mother was talking about just stocks in general. Like, you know how right now, like, you know, you go outside, you just hear people on the street talking about the markets or talking about day trading or dogecoin or, you know, whatever the hot new thing is. Like, seems like the last time that happened was basically like 20 years ago. And then as it inevitably does, you know, it just kind of dies off, and then it just goes back to those of us that are patient and work hard and consistent, and probably another 10, 20 years, you get another big hype where everybody's obsessed with it. And
I think I forgot what article I was reading, but they were saying that the dot-com bubble that went up and the big losses that everybody took was basically what scared people out of the market for like 20 years.
Yeah.
Like until a new generation showed up.
Yeah. But the thing is, like, I can kind of understand it back then because, you know, we didn't have the brokers we have today. We didn't have all the social media. We didn't have like all this information. Like, we didn't know how like small cap stuff worked. Right. So back then, like all those people that were doing that, it was like, you know, they'd see an article in the newspaper and would say something, and then they'd throw all their money into it. And then they'd look at the newspaper the next day and it would say it's down 30%. Like it was such a different time that, like, yeah, people are like, wow, like if they're moving this quick, like that's terrifying. I'm not putting my money into these things. Like, you're telling me I can lose like my whole savings overnight? Like, not a chance, right? Whereas now we can actually, you know, monitor it a lot better and be like heavily involved and actually know what's going on. But I think that is a big thing, and I think that's going to happen again now. I think a lot of people have already gotten scared out of the markets. Like, there's been a lot of big losses.
Oh, I mean, I see almost the same thing happening this time with altcoins versus last time, like dot-com bubble, because back then the internet was new too. So the whole idea was like, if the internet is this new magical thing, it's going to take over the world, and I'm going to invest in pets.com. I don't know what they do, but it's on this internet thing. And it's going to be big, right? And I see the exact same thing happening with these altcoins. Like, I don't know what Dogecoin does. I don't know what kind of blockchain, what proof of work algorithm it uses, but it's a crypto. It's on blockchain. Like, it's the future.
Yeah.
You know, like there's people tweeting at us because they're shitting on us because we talk shit about Dogecoin. We first of all, we didn't talk shit. We're just putting some reality into it, right?
Yeah, we're just telling you what it is and what it does, which is nothing.
Yeah. Right. And all we said was like, yeah, it could go up, but it could go down too. Now everybody that bought the 70 cents, they're looking at us and going, well, we did tell you, right?
Yeah.
We dropped 35% in like 24 hours.
Yeah,
but like,
that's the thing. Like people ask me that kind of stuff all the time. They're like, oh man, oh, I'm thinking about buying this thing, like Dogecoin, for example. Like, oh yeah, I'm thinking about buying it. Like, what do you think? And I'm like, I wouldn't fucking put my money in that if you paid me to put my money in that. That's more than I was putting in, because that would be a good investment. But like, you know, it's because like it doesn't make sense. It doesn't make sense to me, and I like to know where my money's going.
Well, me personally, because I got into crypto in about the peak of the 2017 boom. So I'm not trying to shit on them at all, but I am trying to warn them. And it's only because I was there. I rode at least 7 or 8, or maybe even a dozen different coins, 98% down, 98% down. Like, so I was there. So I'm not trying to shit on the coin. I'm trying to give you a fucking warning. If you're up 10, 20, 50x, take some fucking money out. Don't wait for that 100x. Like, you know?
Yeah, that's the most frustrating thing, is like, I don't know what it is, but people will ask me this stuff. I'll tell them what I think, and then they'll just do the opposite anyways. And then sometimes they'll come back and they'll be like, man, you told me not to buy this. Like, it's up like 50%. Like, I'm already up like $1,000. Like, you should have bought it. Like, maybe you should buy in now. And I'm like, no, man. Like, I know how to make money in the markets, and it's not gambling on this crap. Like, it's not what I do. And then, you know, then there's the odd time where then I think it just becomes this perpetual like thing where, like, when you're in these bull markets, there's just crap after crap after crap that's just going up. And then, you know, we're sitting over here being like, okay, guys, like, you can trade these things, but the fundamentals are crap. Like, this is not if you want to ride this thing up, if it goes up, great, take some money. But like, you know, then they just keep putting more, because I've seen guys do it where it's like they start with a few $1,000 and they have $5,000 and they have $10,000, and then it's like every time there's another one of these garbage things, and like, well, every single time you've told me not to put my money in here, it's gone up 50% or 100%, and then, you know, just compounding, and then you put, you know, $50,000 into this garbage thing, and then it just absolutely tanks, and then you're like, shit. And you put all your money in the next one, and then it tanks, and it's like, and then it tanks, and then it tanks, and then it's like, oh yeah, the markets have changed and people have come back to reality, and then you lost all of your money.
And the thing that's, I think, going to surprise people is the markets can change in the snap of a finger. Like, it's not a gradual thing. You won't see it coming.
No.
You'll know it's happened when you're in it.
Yeah. Yeah. Well, you probably won't even know. You'll know it once it's over. Like you'll look at exactly. Everything's already happened, and you'll go, "Oh yeah, that was a bear market, wasn't it?"
I came to that realization, I think, late 2018. So like the whole thing topped like what, January 2018, right? December 2017, January 2018. I came to that realization around summer 2018. I was like, oh fuck, this is not gonna go back up.
Yeah, it took me 6 months. Yeah.
Yeah. Oh man, I that was not a good summer, man. I had to come to like some hard realizations.
Yeah, but, I know. But again, it just comes back to that old thing. Like, just put certain amounts of money wherever you're gonna put it, but just know how long it's gonna be in there, right? Like, you can if I'm putting money in something for 10 years, like I can weather a bear market. Like if it's down for 2 years, I'm cool. Like I'm fine. It doesn't stress me out.
So here's the thing, like that, the good thing that came out of that was that I doubled down on the things that I knew that worked. Because once you're in a bear market, you start to question everything. It's like, oh my God, is my thesis wrong? Is this whole thing just like, whatever, right? So I did my research again, and I'm like, no, the fundamentals are still unchanged. The market just sold off, right? Yeah. So I took whatever I had and I consolidated into the only thing that I knew that worked in Bitcoin, and then put like a flyer investment in ADA, Cardano, just because I listened to like every lecture that guy did, and I'm really impressed by the project. So that's all I did. I consolidated everything, just sold the losers. And that's a hard thing to do too, is to sell your losers, because you have the hope that it'll go back up, right? but yeah, so I consolidated everything, and then this run up, like I did quite well. Obviously not as good as the Dogecoin dudes, but like, but I mean, like, this is not a competition. Like for me, it's not even like about. Actually, I was just talking about this with my crypto group. Like, it's not even about making money this time. It was about learning the right habits. Because if I want to be doing this for another 5, 10, 20, 30 years, I have to exercise the habits today. Otherwise, there's not going to be a 10, 20, 30 years. I'm going to be broke.
That's been my biggest mindset thing, like, more so as of lately, but always, like, even after my first 6 months in the markets, when I got a hard kick in the ass with reality, and it was like I don't look for that. Like when I hear about people like putting $3,000 into Dogecoin and turning it into $500,000, I'm like, what, that's awesome, man, because like I know if it was me, if I did put $3,000 into that, if it turned into $5,000, I would have sold, because I've been like, wow. I've made 80% of my investment, I'm out. Like, so I know me personally, I wouldn't hold that long because I don't have the personality for it. So that's one thing that I always tell myself. The second thing is, I want to do this forever. Like, I want to really learn how to make money. Like, I want to be able to sit at my computer on a daily basis and get paid. I don't want to sit there and be like, oh man, when's the next crazy meme stock coming out that I can just gamble all my money into? Like, I don't want to be stressed. I don't want to risk any money. I don't like risking money that I've worked hard for. I just want to be able to put it in the market and get paid. And I want to be able to do that every day with no stress and just relax and do my thing. That's what I want. And you can't do that on these big gambles. And I'm not interested in that.
Yeah, I think you just made me realize something. Like there's what most new traders are doing is not trading, it's gambling. You're just flipping a coin. Like, I don't see any difference between going to a craps table, betting it all on black or red, because you really don't even understand the fundamentals, right? Yeah. And then there's trading where you're like consciously putting, like you said, putting your money to work. You look at it as an asset, and you need a certain amount of return for it, and you have a plan on how that thing's going to get you.
Yeah, right? Exactly.
And like here's one way that I did it recently. Like, so I stopped trading futures, Bitcoin futures, because it's like just madness right now. Like 2 weeks ago, I think there was $9 billion in liquidations.
Wow.
9 billion. That day that Bitcoin went from, I don't know, what was it, 60-something thousand to 47,000? Yeah. $9 billion in liquidations in one day. So they said something like 500,000 traders got liquidated, or 500,000 accounts.
Jesus.
Right? So it's like, so for me, once something gets too crazy, I'm gonna pull out, right? So I'm not trading futures at all right now. But that doesn't mean I haven't found ways to put my money to work, right? Because I think people think that trading and investing is like, it's almost like a side hustle or something you could do on the side. But it's like, it's a full-time job too. If you really want to do it right, like, you put in so much work, right?
Mhm.
Like every day even. And
Yeah,
so
like I work, my day job, I'm doing at minimum 50 hours, usually 50, 55, 60 hours a week at my like full-time job. And then every night I'm minimum 3 hours on the computer. And then probably, I don't know, maybe 5, 6 hours Saturday, Sunday I spend. So like, I don't know, probably like 25 to 35 hours a week. I'm studying the markets and putting out orders and stuff on top of, 50 to 60 hours a week in my full-time job.
yeah.
So like I don't have any free time, and then I'm bodybuilding outside of that, and I'm meal prepping. Like through the week, I don't even turn the TV on. Like
I don't have cable either. Like I'm blessed if I can watch Netflix twice a week.
yeah, it's like me. Like on the weekends, I might watch like 4 episodes of some little binge series that I'm into, and then that'll be it, and then it'll be next weekend.
Yeah, and what I wanted to say was like, this whole idea about passive income, I think, is the worst virus that this generation has gotten. Like, what the fuck is passive income? You just have a bunch of money, you throw it out there in the ether, and it becomes more money for you. Like, I mean, what world do you live in? Like,
Yeah.
right?
I think it's the wrong name for it. Like passive income is like, you invest your money in the markets, and then it's like, yeah, you're just earning more money while it's sitting there. But like to get to the point where you're ready to put that money into the markets takes time and effort and work.
Yeah, well, it took you work to get that money, and it's going to take you work to grow that money too, right? The market is working automatically, but you have to put in prep work before. You put in how much prep work every night before your trades?
Yeah, like it takes me 2 hours every single night to get ready for the next day.
Yeah,
Every single day of the week. It doesn't matter if
passive income.
Yeah, like I said, I get up at 4 in the morning. I set my stuff, and then I leave for work at 4:45. I'm usually home at like 6 or 7, and then I look at the markets again until 8 or 8:30. I make my meals and I go right to bed. that's my day.
And like, so what I wanted to say about my the money thing was like, I think my thing is like looking for inefficiencies somehow in the picture. And so one of the ways that I did that was like, first of all, I promised myself if my Tesla stock ever like went really far and my Bitcoin ever went really far, I'd force myself to cash out and buy some real assets. So that let's say it all disappears and Tesla goes to zero and Bitcoin goes to zero, I have something to show for it. Because I don't want to, I don't want to have a story to show for it. I want to have something to show for it. Right?
Yeah.
So I ended up buying my dream car, which is a Model Y recently, right?
Yeah.
But that was a really calculated thing. It's like I bought it, but I financed it. So I took some money out, paid the down payment. I paid like 17,500 down payment, right? And then it's a $70-something thousand car. I borrowed 63,000 from Scotia, 2% interest rate financed. And so my thought process, but the thing is this: it's like I actually have the cash. I literally have the cash. Split between 3 accounts, what we were talking about earlier. Yeah. And they're sitting there, they're actually yielding. So I have them in USDC, and they're yielding an average of 9% API, so 9% interest a year, right? So I've got like something like $60,000 sitting there getting, so like I'm not investing because I don't know this market, but I'm not going to lock my money up into a car either. If Scotia is going to give me a loan for 2%, which is basically free, it's $3,900 to borrow that money for the whole all 6 years. Right?
Yeah.
I'm going to take my $60,000 and earn a freaking 9% interest on it.
Yeah.
Right?
So you're earning 7% overall.
7% minimum. And then like if a trade happens, I have cash on the side. I can deploy it. I can do whatever it is. Right? So it's like, so even when you, so what my point of trying to make is like, even when you don't necessarily have a trade or a move to do, there's still things that you can do. Just try to think outside the box. Mm-hmm. And this is the work portion of it, right? Just put it to work.
Yeah, exactly. Yeah,
and like, and I even posted the other day, like I was watching the exchange rate. I'm like, Canadian dollars like 82 cents US right now. It looks like it might go up a little bit higher. I'm like, just buy some fucking US stocks now. Sell it in 6 months, and the Canadian dollar's back down to 75 cents. You just made 7% in 6 months.
Yeah, yeah.
Like, I can't even do that with a trade right now.
Yeah, right? I know, it's really funny how it all works. Like once you're in the matrix, everything starts to make a little bit more sense.
Yeah. So I think everybody should start learning to look at money a little bit differently. and how many, and look into the different ways you can deploy it and use it, because it's not just straightforward.
And just don't fall for all those stupid advertisements of like, oh, you want to learn how to make $5,000 a month doing nothing. Nobody can make even look at like okay, we got to end this podcast here in a second, but even think of like YouTubers or like Instagram people or like whatever, like I can't remember who they were, but like my wife showed me this YouTuber and it was like they just bought like this big house and all they do is like make funny videos on YouTube, like they just do little 10-minute comedy skits or whatever. And then they like posted, so everyone thinks like, oh yeah, it must be great getting all this money, like they're barely doing anything, right? Like that's what you think. But they posted their whole story and they're like, yeah, like we're just so grateful for this. Like we both quit our jobs like 4 years ago to try and give this shot at YouTube a full time. We moved out of our apartment. We moved in with like my girlfriend's parents. Like we were living off craft dinner for the first year and a half before we first got our first YouTube check. Like we almost had no money left, and like there's just this whole backstory of just grinding away just to make 10-minute funny videos on YouTube. And now they're making well into 6 figures off of their YouTube channel, right? But everyone looks at it, and all you see is that little bit on the surface. Like you look at Warren Buffett, like all you see is like, oh yeah, he's a billionaire investor. Like look at the backstory, look at the history of how much work these guys put in to be able to do that. Like day traders, like, oh yeah, the guy can just pull $3,000 out of the market every day. Look at the backstory. Like look at the struggles they went through. Look at the emotional turmoil, the losses, like the depression, like everything that goes along with getting to that point to now where you can just sit in your house and relax and pull money out of the markets or pull money out of YouTube or Instagram or whatever. Like I had to do my rant.
No, I think that's great. That's a perfect point to end on. I think like people shouldn't look at investing or trading as like a side thing. Like if you really want to make some money out of it, take it seriously, like a job, right? Like don't think of it as like you put your money out there in the ether and it does something for you. It's like, think about how hard it was for you to earn that fucking money, working $15 an hour, 20, whatever it is. How hard it was to get that money in the first place, and you're just gonna throw it out there and bet it on red? No, what you do is you put more work in.
Yeah. That's pretty much the way the world works, and a lot of people just don't understand that, and then they get mad at the people who have stuff. Must be nice. Look at how lucky this guy is. Like, yeah, Mr. Lucky over here only working 110 hours a week.
Yeah, I know. Like somebody tweeted at Elon saying like, must be nice or like lucky. And he's like, I employ 50,000 people, like, and I'd have worked like 40 hour, like. I think
I saw that.
Yeah, I don't know, just
Elon Musk, he's like, wow, I guess I'm lucky that I work like 16 hours a day, 7 days a week for the past decade or like whatever the hell it was. But yeah,
running 2 freaking companies, taking every dollar I have and investing in them, and employing 50,000 people, and you're criticizing me? Like, come on.
Yeah. Like imagine the shit he's got to deal with on a daily basis. Like,
yeah. All right, brother.
Let's wrap it up there. Those are some
cool,
good
brother.
rants.
All right, so next week I think Brandon's back. We'll start back up with the market updates, and shoot us a message if you want us to answer some questions for you, because sometimes we forget that we could talk about some high level stuff and people are like lost. So all right, take care, YouTubers.
See you later, guys.